Everybody, this is Tchaikovsky. Welcome to yet another lease video. Um, we're going to go ahead and do the same facts. This is a final exam question I used several years ago. So go ahead and do this. My disclaimer and copyright notice. The information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentation is for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008 to 2026 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Throughout the presentation, I will make reference to publicly available information that is the copyright of other parties. I do not claim any right to those third parties. So we're going to take one fact pattern and we're essentially going to run this through both parts. So just kind of suspend your disbelief. Let's go ahead and go right to it. Okay, so on 1/1/22, a lessee enters into a 4-year asset lease with annual payments of $24,000 per year. The first payment will be made on 12/31/22. The interest rate implicit in the lease is 6%. The lease qualifies as an operating lease. So we're asked to go through and to do this, but we'll go ahead and make this. We'll go ahead and 12/31/24 and 12/31/25 because we enjoy inflicting pain on ourselves. Okay, so here we go. First thing we're going to go ahead and do is we're going to say, all right, this is being paid at the end of every year. So this is basically my payment amount. Then I'm going to go ahead and go to the present value of an annuity. I'm going to go ahead and look at this 6% at 4 periods. So 4 periods at 6% or 3.46511. So the value of this, basically the way I'm going to go through and record the right of use asset and liability. So on 1/1/22, it's going to be right here. Okay. Now let's go ahead for fun because we need to do this anyways. Let's go through and basically, again, this is an operating lease. So let's go ahead and do in our amortization schedule. So my principal balance here starting out is 83,163. And the interest rate is going to be at 6%. So my interest expense is going to be at 4,990. My payment is at 24,000. This is never going to change. Okay, so my payment is here. My principal reduction is the difference between the payment and the interest, and my ending principal is going to be the principal beginning minus my reduction. This then becomes the beginning balance. And we can then go through and take this to the end. And we get an ending balance here of 0, which is what we want. Okay. So now that we've gone through and done this on 1/1/22, we're going through and recording the asset and the related liability. Now, when it comes to the, when this basically comes over here now to the 12/31/22, 12/31/23, we'll go ahead and just make this kind of do what we've done previously, 12/31/24, and then 12/31/25. Okay, so I'm effectively going to be doing basically every single time I basically have a lease expense, and then I may be crediting cash. Okay, so this is going to be 24,000 every single time. And remember, unlike the one I gave you that had like that payment at the very beginning of the year, this is like, again, this is something where it's like, this is a little bit easier if you're taking my exam in intermediate accounting 2 this summer 2026, you better believe that the question I'm going to be giving you is going to look like this. I'm going to give you an upfront interest payment. It's only fair. I made myself suffer to do that question, so I have to pass that along. But I get partial credit, so there you go. Now, when it comes to this, what I'm going to be going ahead and doing is I ultimately I got to record the asset and liability, but I ultimately have to get rid of these guys. So the way I'm going to go ahead and do this is I'm going to go ahead and debit the right of use asset, basically credit the right of use asset, and then debit the right of use liability. I'm also going to show you another way to do this question, but I'm fine with you basically doing this. This is essentially going to effectively be for the principal amount of the reduction. And so here we ultimately need to get rid of this off of our books. Okay. Now, the other way I could have done this question is I could have said, all right, lease expense. Um, you know, okay. So another way you could do this, okay, so an alternative way to do this would be is you debit lease expense for 24 grand. And then what you do is you then credit the right of use asset for this. Your difference here is to the lease liability. Then what you turn around and do is you're crediting cash for 24,000. And then then you would also be debiting the lease liability for the 24,000. Now, if I look at this here, effectively, is this getting me to the same answer? And the answer is yes, because if I look at here, when I combine these two here, this is essentially giving me this right over here. I'm just putting that out there because if you do, in fact, have something messed up, like what I'll do on my students' exams I'm definitely doing it now. But if I come over here and I have to do this year-end entry, you're going to have to go through and do this. You have to do the lease expense at year-end because it's like you've used the asset for that period of time. And then you got to basically go ahead and record the offset to the lease liability, and then you take it down when the payment is basically going through and being made. So that is effectively how we would go through and answer like this particular question. So again, if you're going through and doing this, like all the journal entries, and I love how I'm misspelling this. So this is what I would be doing every year. So you record it initially, and then you do these parts here. Okay, now let's take a look at question 2. And we're going to go ahead and make our lives a little bit more miserable by asking ourselves to go through and to do this more. So what's really the difference between these two, scenarios? And what I would kind of, have you just kind of think about. So there's literally no difference here when we're kind of talking about the amortization table. Where things get different is that how do we go through and record we got to do two different things when it's a finance lease, because if it's a finance lease, we're actually kind of going through and when it's a finance lease, we actually own it. So if we do in fact do this, we're going to have right of use asset, and then we're going to have lease liability. So my right of use asset is going to be recorded here at this same dollar amount. That again is not going to go through and change. And this is going to be on 1/1/22. Now, on 12/31/22, I have like two different kind of things going on. So one of the things I have to do is I have to show the amortization. And let's do this kind of the same way we did the last one. Okay. So when I'm going through and doing this, I needed to show two things. Let's go show the use of the asset. So I'm going to debit amortization expense. I'm going to credit the right of use of the leased asset. And I'm going to basically do this over, the longer of the economic life or the lease life, but it's over here. It's telling us over 4 years. So I would take this and divide it by 4. So this entry is this is going to be the same every single one of the years. Okay. So that's one part of what we're trying to kind of go through and do. Okay. So the next part over here that we have to deal with is that, okay, we're making payments of cash of $24,000 every, basically at the end of every single year, right? So over here, I'm making these payments. Now, I also have to kind of keep in mind is that because this is a finance lease, I'm going to recognize interest expense. And then what I'm going to be crediting here is my lease liability. So my interest expense is going to be $4,990 for year 1, $3,849 for year 2, $2,640 for year 3, and then 1,358. And then here my liability is going through and being reduced accordingly. And there you go. So this is over here to record use of asset. And this I would over here, I would call this to record lease payment. Okay, so that's really the key difference, right? So the cash coming out is going to be the same. It's just here for when we look at this, one of the big differences on respectively, this would go in the operating section of the statement of cash flows. Because this is a finance lease, only the interest expense is going to hit into the operating section. This is going to go into financing. So that's really, hopefully this has been a helpful example just to kind of go through and illustrate how these kind of play out as operating versus financing leases. So thank you for joining me, and I look forward to seeing you on future videos. Have a great day.